East African leaders converge in the Kenyan capital for an annual summit, but the slow pace of removing barriers to robust regional trade leave a sour taste among investors. Another trading week comes to a close. This is Global Business. Hello and thank you for joining us. We're bringing you all the latest developments on the business front. I am Penina Karibia. Also coming up, Egypt's cabinet backs privatization of energy production and distribution, and an entrepreneur's quest of turning Alex, South Africa's roughest township, to a tourist hotspot. Tanzanian President Jakaya Kikwete has taken over as the new chairman of the East African Regional Bloc. Kikwete expressed Tanzania's commitment to regional integration. He pledged to ensure non-tariff barriers to trade across East Africa are eliminated during his tenure. Kikwete takes over from Kenyan President Uhuru Kenyatta. Implementation of the Regional Common Market Protocol was a key achievement under Uhuru's tenure. The protocol has eased goods transit time and made both the central and northern corridors more efficient. Infrastructure projects, which include power generation, road, rail and port construction, got underway. The leaders, however, insist more needs to be done to enhance regional trade and make East Africa a competitive destination for global investment.
Without a doubt, we have made progress in eliminating non-tariff barriers to intra-community trade. I am grateful for the cooperation and goodwill shown by member states in demolishing these obstacles to integration. Even so, about 24 non-tariff barriers still remain unresolved. This denies us the opportunity to unlock the immense promise of integration and starves businesses of innumerable opportunities.
It's been 1 year of good harvests for our region. I'm here to assure you of Tanzania's commitment to stay the course and propel our integration process to greater heights. Taking over from your good work and strong foundations makes my task ahead to be easy. We'll build on your achievements and take our community to the next level.
More than 90% of Zimbabwe's $3.5 billion national budget will be spent on wages. The country has one of the highest wage bills in sub-Saharan Africa. The balance of the budget is meant to fund capital projects which underpin the success of a national economic recovery plan, ZIMASET. As Farai Mokutuya reports, financial experts, development partners and government officials had to meet to try and increase the fiscal space the government has to maneuver.
Put simply, these stakeholders were meeting to devise ways to free up more resources that can be used to fund the country's desired long-term projects. Apart from having the highest wage bill in the sub-region, Zimbabwe is also being weighed down by an external debt of $8.3 billion, which government has committed to start repaying, albeit slowly. The tax base is shrinking as more companies shut down, and all this means the coffers cannot sustain any further expenditure. It is clear that Zimbabwe's government needs more fiscal space in which to maneuver, but the key question remains, where does it find the resources to be able to do that? With backs to the wall, there could be the temptation to increase taxes, but that is tantamount to slaying the goose that's laying the golden eggs.
There's a limit to which you can continue taxing a society. I do believe that our marginal tax in Zimbabwe is not high enough. There is no more room for maneuver on that area. If you compare with other countries, this is why you've now seen other companies opening offshore accounts or offshore companies, say in the areas like Mauritius, for example, where the taxes are low.
So government is now planning on maximizing revenues from its natural resources.
Ensuring that whatever resources we are generating out of agriculture, whatever resources we are generating out of mining, there is enhanced value addition and beneficiation as a way of ensuring that what accrues to Zimbabwe is consistent with what is required to deal with the income challenges that we have.
But there could be other remedies closer to home, in particular reining in expenditure and also increasing productive capacity. How
do you increase revenue? By increasing production. Make sure that the companies in Zimbabwe are operational. Therefore, it means the international community, you have a role to play in increasing this cake for Zimbabwe. We need to ensure that we also get access to capital.
Currently, Zimbabwe's high international country risk means any lines of credit come at a high price, which impacts the ability of the private sector to repay debt. So until cheaper funding is made available, it will remain difficult to grow the economic cake here at a time when the appetite for it is high. Varai Mwakutuya, CCTV, Harare, Zimbabwe.
Oil and gas service providers in Uganda have applauded the government for awarding the contract for the construction of the country's oil refinery plant. After 2 years of delayed activity over the project, Russia's RT Global emerged as the preferred bidder for the 60,000-barrel oil refinery project. RT Global is a subsidiary of Russian defense company Rostec. CCTV's Michael Balake has that story.
Uganda's refinery is a key pillar to its oil and gas commercialization strategy. But negotiations to get a lead investor have taken longer than expected. Companies, mostly local service providers, have been hit the hardest.
We have warehouses which are empty. We have, these are of our members. We have trucks that have no work, but then they are being paid for. Most of these things are acquired either by loans or you are paying a lease rental on them. People have had to cut back on staff, not even just the local Ugandan companies, but even some of the bigger multinational companies have been hit heavily.
The government's announcement of Russia's RT Global Resources as the preferred bidder to construct a $3 billion oil refinery project has been welcomed. Service providers say the expectation that production will start soon has helped investor confidence.
To see that a contract has been awarded for the building of a refinery, that is an indication that indeed this project, the oil project, is going to take off. So it has boosted a lot of confidence where there was the apathy and the people were beginning to feel a bit lethargic towards this. It has created anticipation.
The refinery project will be developed under a public-private partnership arrangement with the government of Uganda holding a 40% equity. The project involves the development of a refinery with a capacity of 60,000 barrels per day, development of crude oil and product storage facilities on site, as well as a 200-kilometer pipeline to a terminal near the capital, Kampala. The first phase of the oil refinery is expected to be in place in 2018. However, there are concerns the government of Uganda needs to commit to its decision. Michael Baleke, CCTV, Kampala.
Kenyan stockbrokers resumed business as normal on Friday after reversing a decision to stop trading for a month. The brokers are protesting a requirement by the Kenya Revenue Authority that they deduct the newly introduced capital gains tax on traded stocks on behalf of the government. They claim not to have the capacity to implement the new rule that is also feared could cause a slowdown in market activity. Kenya implemented a 5% capital gains tax in January that investors say could also affect investment in property and the country's nascent oil and mining sectors. The Brokers Association filed a case in court asking for the lifting of the tax collection burden. Nigeria's bonds are beginning to offer value after being ranked as the worst performers in emerging markets this year. Naira debt, which lost 9.4% since December, has yields climbing to all-time highs and will probably lure investors looking to reinvent cash or make a bet on the market. Market analysts say the currency of Africa's top oil producer may rise after policymakers scrapped a tool for defending it, which was eroding foreign exchange reserves. However, risks remain significant as oil, Nigeria's main export, resumed decline the past 2 days that has seen the price plunge almost 50% since June. The political environment and ongoing attacks by militant group Boko Haram ahead of March elections remain a major concern among investors. Let's go through the markets now. And a splash of green across the bourses we track here on global business, except for the Nairobi Securities Exchange, which dipped by 0.14%. Now, this, of course, follows the Kenya stockbrokers' threat to stop trading for a month starting today due to a court case involving the reintroduction of a capital gains tax. They, however, backed down and resumed business as normal. And still ahead, Egypt's cabinet backs privatization of energy production and distribution. And Mali ups its game to restore cotton production fortunes.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
You're watching Global Business. Welcome back. Egypt's cabinet has approved a law privatizing electricity production, distribution and transmission, according to a state-owned news agency. The law limits the government's role in the electricity sector to regulation and supervision. It separates activities of production, transmission and distribution to ensure competitiveness in the private sector. Egypt has been suffering from an acute energy shortage as foreign oil companies suspended extraction works. Investment in the sector was affected by political turmoil that took hold in the aftermath of the 2011 uprising. Parts of the national grid are also in need of renovation. Joining us live from Cairo for more on this is Yasser Hakim. So Yasser, what are the details of this new law that has been adopted by the cabinet?
Well, it gives room for the private sector, that's for the first time in Egypt, to have a role in distributing and marketing and sale of the grid, the electricity grid. It will also give the competitors the chance to sell at different prices, that is competitive pricing. There will be two different markets, a market that is a fixed pricing and with limits by the government, that's the government-owned grid, and then you have the private sector that will be allowed to sell with competitive pricing. Over 5 years, the government will then completely eliminate all subsidies, and it will be a totally open market for the private sector. However, the infrastructure will be all under the control and ownership of the government, whether the grid, the transportation and distribution infrastructure is considered strategic commodity, and thus it will not be owned by the private sector. The private sector will only operate but will not own the grid, and it will also have the private sector will also contribute in the renovation of the infrastructure and the electricity in Egypt. So overall, it's a kind of a mixed law between the state-owned and the private sector, not totally private, but it will leave room for the government to have the ownership.
So yes, sir, what impact is this likely to have on businesses and the economy?
It should have a positive impact. The private sector has been calling for it, and experts have been calling for it for a while. The government was very hesitant in the electricity side. A few months ago, it has given the private sector the role to the market of the renewable energy, so that it can cover around 20% of the total consumption and production, of the electricity in Egypt through renewable energy, where the government would buy off any electricity produced from renewable energy by the private sector to encourage investment in the renewable energy. Now, going into electricity, now, first of all, it will relieve the burden of the government, especially that the government pays around $4 billion a year for subsidizing and spending on electricity, the production and the consumption, there's a big deficit between production and consumption that's around 3,500 megawatts, where the government needs the money, needs the expertise to cover this deficit. The government cannot cover the production, the total consumption. It does not have the means now, though the private sector will go in, will spend money, will sell the electricity and relieve the burden of the budget of the government. And so the government can spend the money on other means. It will also help the consumer in that with the competitiveness in the private sector, it will lower the prices of electricity. And this happened in the telecommunications in the last 10 years. When it was given to the private sector, the prices went down. And it was good, better quality, better service, and better price for the consumer. So overall, this will help the government, which was already indebted to the foreign oil companies by $6 billion, to the energy sector by over $10 billion. This money now will go to other means, and the expenses will be on the private sector.
Well, you know, Yasser, you just touched on my next question, because I was going to tell you that half the projects Egypt will propose at the March Investment Summit will be in the energy sector. And so this obviously means that Egyptians should expect to pay less for power in coming months and years, right?
Let's say in coming years. In coming months, it depends how fast this procedure will go. But for now, the government is reducing subsidies for the next year or two on electricity. And whether the private sector will go into this market quickly, then maybe then it will be competitive and prices will be lower. But at this point, before the private sector will go in, until the infrastructure is ready, until all the regulations are ready, the Egyptians will still have to pay a little bit more every year, because the government wants to release all subsidies in the next 5 years. Now, this year, in 2014, there was a reduction in subsidies, and the Egyptians are paying more now. They're expected to even pay more in 2015, but gradually, so they do not feel the huge impact of the increases in prices when you release the subsidies. So let's say in the next few months, no, it will not be felt now, but maybe in a couple of years.
Oh, and that should be good news indeed for Egyptians. Yasser, thanks very much for joining us. Yasser Hakim live in Cairo. Now, a South African company has teamed up with one of New York's most prestigious schools to bring better business skills to the African continent. Officials hope the joint venture will help develop Africa's corporate community and provide greater access to global markets. CCTV's Nick Harper reports.
Sometimes if you're not sure how successful a product will be...
The New York Institute of Finance, having a global outlook is a lesson that's been learned over time. In its almost 100-year history, the Institute has taught some of the best international business minds. Now, it's partnering for the first time with South African investment company AfriAccess.
This is the right time for Africa. 20 years ago, Africa was not really a serious investment destination, but you know, there's private equity money and general investment coming to Africa, so it's the right time in terms of opportunity for us to really make a difference and to really transform the investment climate.
Chinyama says South Africa has quickly become the financial gateway into the continent. His aim now is to move business in both directions, helping CEOs to bridge the gap between Africa and the rest of the world. It's that outlook that has helped form this American-South African partnership.
We pick partners who are as excited as we are about the size of the opportunity. AfriAccess are a great partner because they have the same passion we do for financial inclusion and making sure that investment education is the best it can be, because it helps grow a nation.
Web-based learning means the Institute's classes are available not just in the US, but throughout the world. Yet some students still choose to make the trip for the full classroom experience.
The reason I come here is basically New York being an international financial center. You get the best in class in terms of what is happening, cutting edge, the things that are happening live now in the market.
AfriAccess hopes this new venture will give South Africans access to more skills to thrive in the global financial market. South Africa's business world has seen many changes in the last 2 decades. Now, with closer links to the US private sector, this latest partnership could help to boost economic development across the whole continent. Nick Harper, CCTV, New York.
Mali is hoping to reclaim the top spot in cotton production, and a 100,000-ton boost in output could help the country achieve its goal. The target of 800,000 tons by 2018 is closer now as Mali returns to cotton production dominance in sub-Saharan Africa.
Mali may very well be on its journey back to the top as the continent's largest cotton producer, after receiving a significant production boost for the 2014-2015 season. The country ranked second in African cotton production after Burkina Faso, produced 552,000 tons this season, just 300,000 tons shy of achieving its 5-year development plan.
From a potential area of 549,000 hectares, we have put 539,000 hectares into exploitation. That is a realization rate of 90%. We had focused a 600,000 ton production and reached 552,000. That is 92% of the target. I think that is a positive result, especially if you compare it to the results from the previous season, which is 440,000 tons.
In a continent dominated by Benin, Burkina Faso and Chad as the leading cotton producers, the production gains would not only catapult Mali back to the top, but it would also improve the livelihood of 250,000 of the Malian population, who depend on cotton returns.
Fertilizers sold to farmers at 11,000 francs per bag have raised a big interest in cotton production. And also, those fertilizers had an effect on production level per hectare. It was 900 kilograms. But this year, we can cheer. We have reached more than 1 ton per hectare.
The government's increased input subsidies in the Malian Company for Textile Development's initiative to pay the producers on time was enough motivation to record the rise in production, despite the low rainfall recorded in the country.
Rain levels were more or less sufficient in many areas, but there are 2 other positive elements. First, the Malian Company for Development of Textile is more and more reassuring, since they now manage to pay the farmers on time. And second, the world market price for cotton has increased. So we have 3 combined elements which brought back confidence to the farmers, who are making more money.
Although countries like China, India and Pakistan dominate the world market, Mali's rise to African dominance may just edge out Egypt, who are currently struggling to stay afloat with their government's cutback on subsidies. Voldika Rosa, CCTV.
Let's go through commodity prices. And gold rebounded on Friday before a meeting of Eurozone finance ministers that could put Greece on its way to exiting the bloc. But prices were still headed for their 4th straight weekly drop. Gold prices had received some support from Chinese buying ahead of the holiday, when gold is bought for gift giving. And coming up, an entrepreneur's quest of turning Alex, South Africa's roughest township, to a tourist hotspot. And now to South Africa, where a young entrepreneur is changing tourists' perception of what a township is and how an informal settlement can also become a popular destination. CCTV's Julie Shire has more.
Alexandra, one of South Africa's oldest, most populous and historically rich townships, is now part of tourists' guidebooks. Commonly known as Alex, it does have the reputation as one of South Africa's roughest townships. But a young entrepreneur is trying hard to change his community's image.
The story of this young entrepreneur started in 2010 when South Africa hosted the FIFA World Cup. Jeffrey saw a gap in the market and an opportunity to build his business, allowing tourists to visit and experience a real township. Since then, the business has taken off and people have flocked to Alex.
Born and raised in Alexandra, Jeffrey decided that the best way to show his real Alex would be by bicycle, allowing visitors to cover more ground and interact with the community.
Alexandra, people don't know about it, so I wanted to put Alexandra on the map. That's the reason why I started my business. So my company offers you 2 hours of your time. We're trying to do something which is more unique, more on communicating with the community, and that actually made it to grow. And it has grown very well from 2010.
Jeffrey's business has proven to be not only sustainable, but extremely popular. African public bicycle tours has been ranked by international websites as one of the top activities in Johannesburg.
Via this tour, you see how the people live in their homes and what their customs are and how they celebrate, how they grieve. It's very important that you see that part of the country as well, the culture.
All my friends, please join this tour because it's great and it's very interesting.
Today, Jeffrey's business employs 3 tour guides and ensures that local businesses like Shabin's are promoted, bringing business to other entrepreneurs in the community.
Things have been going well, and to the community as well, things have been going slightly a bit better.
Jeffrey's entrepreneurial heart has translated into this successful company. But while African Public Bicycle Tours is his first business, he is certain it won't be his last.
Well, my future plans is to make people use bicycles as a mode of transport everywhere in Johannesburg, in big cities and small rural areas as well. You must persevere, you must go on forward, and I will not say anything less than that. You must always persevere. If you have a goal, it all starts with a dream.
Julie Shire, CCTV in Alexandra, Johannesburg.
Let's look at the currencies now. When the Kenyan shilling was stable against the dollar on Friday, and traders said it was likely to trade in a tight range over the next few days. The currency firmed this week, buoyed by a drop in importer demand for dollars and hard currency inflows, chasing high yields on local bonds and fueling a rally in shares that has sent the blue chip index to its highest since 2007. And that's it on Global Business. To send your feedback to Global Business Africa at cctv.com. Visit our Facebook page, CCTV Africa, and stay in touch with Global Business on Twitter using the handle at CCTV News Africa. I am Penina Karibe. Thanks for watching.